Well, good morning. I see the amber light's still on, but I think I've got a few more minutes yet. So we're not going to talk about rugby or American elections based on the speakers this morning. I'm going to focus on reputation, and I've been in the general insurance industry for 30 years now. A lot of my career was Ross and Alliance, and the last 8 years or so at Ecclesiastical, where I run the UK insurance business. In many ways, I think reputation is all that we have. If you think about it hard enough, you know, what is our company and what do we stand for? I think our reputation is a very big piece of what we are. It drives relationships and it drives buying behavior. A good reputation attracts talented people to your industry and to your business. Good processes ensure that reputation is reinforced. And the right ethos in the company drives the right sort of behaviors inside the organization, which ultimately drive that reputation. Of course, if you don't have a good reputation, you get the obverse of that. So I do think we need to come back to this point about people, talent, and good processes inside organizations, and how we instill the right reputation, the right type of behaviors, how consumers and buyers, whether they're commercial or retail, regard us, and what is that drives that reputation. You know, and David's touched on some of that already this morning, because it's not just about what we do and how we behave, but it's how we're perceived and how the headlines are driven by others at times. This is a trust barometer chart from Edelman. David showed up one version of that earlier, showing 2011, 2012. And we can see general insurance and indeed insurance is not separately identified. We're within financial services here. Banks have been separated out. And this particular cut is based on two sort of questions. Do you trust these organizations at all? Or do you trust them a great deal? And you can see that the technology sector, the Apples of this world are right up there in terms of trust, consumer trust. But the financial services sector, banking, media are right down at the bottom. You can argue there's been some improvement. Well, there has been some improvement on this chart. So that's part of the good news. And the good news is also that there's plenty of scope to go further. But it suggests as well that we've got a long way to go. The scores at the top of the chart are more than twice the scores at the bottom of the chart. And when you look at the headlines and think about the practices that we've seen, particularly in the banking sector, but also affecting insurance as well, perhaps it's not surprising. Because the challenge is how do we go about addressing that? How do we go about moving up in terms of reputation? So I would argue that there are two sides to our reputation, earned and ascribed. Earned is really what we deserve. You know, the things that we've done that drive our reputation as a company or as an industry. Ascribed is more driven by other factors and by what others say or do. You know, whether that be the media, the headlines, or possibly it might be how the public regards financial services generally in the back of some of the banking scandals that we've had. Let's look at the headlines that we've seen. And again, David touched on some of this. It's hardly surprising in terms of earned reputation, what we've seen in recent years. Misselling on PPI. If you look at that from a point of view of customer value, it's pretty poor practice. And it tars the banks and insurance companies and lenders. You know, and you get the emotive headlines. Wriggling out of claims, being ripped off. And the dirty secret. You know, and if you stand back, you know, selling accident victims' details is really quite a shabby practice, isn't it? We stand back and think about it. I think, personally, it is a shabby practice and not something we should really be proud of. And perhaps it's driven by better use of data. Perhaps it's driven by looking to improve margins to secure advantage. But if you stand back and think about it from a consumer's point of view, you know, it's poor practice, and it doesn't do anything to enhance our reputation as an industry. The ABI needs to work harder to help us improve our industry and pull insurers together to work together more collectively. It's trying to put much more effort into that. And it's certainly true that the Financial Conduct Authority is going to be looking much more closely at our practices and to be much more interventionist, not just on selling, but also on how we develop our products. And the focus of TCF is shifting much more to the product development process and the product management process, product lifecycle management. And what do we do to ensure that we are fair, transparent, and open with our customers and delivering real value? Yes, it's been touched on this already, that our reputation is ascribed by the actions of others at times. Insurance is seen as synonymous with banking in many people's eyes. And you do get the media headlines where there may be good content in the story underneath, but the headline affects the perception of the reader and of the consumers. So we do have to work really hard on how we can drive better headlines, better reputations through better practices, and to have much more concerted effort on this, both within our companies and across the industry. And I'll touch on that in a few moments. Again, there have been some improvements. This is the GIMRA tracking study on claims, which I think 9 of the UK's major insurers ascribe to. And you can see here on this chart that there has been improvement since 2006 to this year. 91% of claimants surveyed are either extremely very or satisfied with the service they got in the claims process, compared to 76% 6 years ago. And clearly there's been a lot gone through that period, particularly in the flooding side. So it does look like we're making some progress as an industry by one measure. So we could argue that we just need to keep working on improving our processes and incremental change will get us there. But I really think that we've got to do a lot more. And we've got to think about it a bit more strategically, and we've got to work together across the industry much more. We are going to have setbacks, and you are going to see such as these sort of comments. I think this was from the Evening Standard back in April, which again drives perception of the industry, financial services here, but affects the insurance sector definitely. Talking about customers as victims, skimming off, caviar income for directors, lemonade services for punters. This may well be more about the banking sector, but it affects how we are perceived as the insurance sector too. If I go back to Edelman and their work this year, their conclusion on tackling reputation and trust is on this slide. Recognize that operational factors responsible for current trust won't build future trust. Societal and engagement behaviors will. I think that's one that you have to sort of read twice and think about. I certainly did in preparing for this presentation. What it's saying is that if you focus on operational improvement, that's good, that's necessary, but it's not sufficient. And that we really need to look at how we engage with our customers. Challenge ourselves much more about whether we truly step in our customers' shoes, whether we really experience our claims process, our sales processes from a customer's perspective. So look also at how we're perceived in our communities and by all the stakeholders we engage with, in terms of how we engage with our communities, how we work with the disadvantaged, how our brand is perceived, and whether we're seen as delivering value back to the UK business and the UK economy. It's also about, I touched on earlier, about our products and how we develop our products. Certainly, Martin Wheatley and the FCA are going to be looking much more closely at how we go about designing, developing, and distributing products. And that's something we need to look very, very hard at. And I think we need to look inside our organizations too, at our own staff. How do they perceive the organization they work for? And what more can we get from our staff in terms of the impact they can have on the communities that they live within, and how does that help drive our reputation as an employer and as an industry. So if we're going to change perceptions, there's a few things we need to do to help change how the reputation that's ascribed to us. And certainly I think we need to do much more with our colleagues in the media to publish more good news stories and not just focus on the bad news stories. And there are plenty of examples. UK PLC couldn't work, without the insurance sector underpinning it. There are plenty of examples of good news stories. If I look at, just be self-indulgent for one moment, one example at Ecclesiastical, we had an academy up in the northeast, the Joseph Swan School, which was flooded, completely flooded, 3-4 foot of water through the whole school in June. That school was back up and running and operating in September this year because of how we got close to them, because of the project management that was brought into play, because we worked with the school to sort out priorities. And they were already planning, not to be open until January. And it was we got fantastic feedback from the broker involved and from the client. But we didn't get it perhaps on the headlines in terms of the media. And it's that sort of thing that we need to push much harder, because it's there that we've made a real impact to our customer, and it can really start to drive a change in perception on how we're seen as an industry. I think industry leaders need to step up more to the plate and more on public platforms to talk through the good that the insurance sector does, and to be more exposed to challenge and criticism. And we have to do more as well to show how we engage with our communities and with society to make a difference in all aspects of our operations. The ABI is certainly focusing more sharply on industry cooperation, and you've seen that in the flood initiatives. That's an example of something that's under discussion at the moment, with insurers seeking to work together to provide a more comprehensive solution for customers in flood-prone areas, and the work with government there. So coming towards the end now, yes, we do need to put the customer at the heart of everything that we do. We need inside our organizations, we know which things are not going well, and we need to challenge that and address that much more speedily. Pace of change is very important here. Transparency with our customer base as well, so they're very clear about what it is they're buying and how we operate. And claims really is the heart of what we do. It's what the client bought. It's when we need to deliver on the promise. In many ways, it's everything. Of course, if you get all these things right, it has a fantastic impact, not just on your reputation, but also on the bottom line. So reputation, I think, is a tricky issue. It operates at a number of levels. It's about operational improvement, yes. It's about your brand, yes. But it's also about how we work collectively together as an industry to help change perceptions of the public and buyers in terms of how they perceive this sector and the good that we do. And perhaps if we put more investment into that and we look forward in 5 years' time, maybe to the future General Insurance Conference of 2017, we'll see some different headlines. And perhaps we'll have gone up that Edelman chart towards the top, and perhaps talented youngsters will see it as a career of choice. And perhaps we'll even have people loving their insurance company. Thank you very much.